Good morning. This is Dylan Giovanni with Behind the Markets. Happy Thursday. Today is Thursday, August 27th. And we've been working around the clock, burning the candle at both ends, basically, on this new research service called Frontier Investor that we're pushing out. And, we're really looking to kind of look at frontier technologies a little bit more of a skeptical and better eye, a more disciplined eye than a lot of our competitors out there. I've been really digging into frontier areas like space or data centers, et cetera, certain technologies that really have an advantage. And I've really gone down a rabbit hole on space. One of the things I'd like to share with you are 5 very interesting facts about space that you might not know that really came to the forefront as I was doing this research. First of all, do you know that we've had the first space age and now we are now entering for sure the second space age? And the first space age was really marked by, financed by governments. So you'd think this happened from 1957 to 1991. And this is basically the Soviet Union, US geopolitical competition, Cold War competition in space. And it was so expensive, only governments could afford to even carry that bill. Back then, it cost $65,000 in today's dollars, $65,000 a kilogram to launch something into low Earth orbit. And NASA's peak budget, because of that, was 4.5% of GDP. Well, fast forward to today, the second space age. Okay, we're in the second space age, which we'll say is 1991 to present. Now, most of the financing is not done NASA. NASA has their budget is only 0.5, less than 0.5% of GDP. But now, because of all that government spending in the first space age, the cost to launch something into low Earth orbit today is $1,500 a kilogram to launch something into low Earth orbit, which is amazing. And of course, now space is financed primarily through private companies. And one of the interesting things that a lot of folks don't know is when you're thinking about space, and this is one of the reasons we really wanted to create this product, when you're thinking about space, most of the things that I'm seeing out there, certainly from our competitors, they're not even dividing the space economy into two halves. So you gotta kind of divide the space economy into two halves, the backbone and the reach. So you have the backbone half and the reach. And the backbone area is what most people get their glazed eyes over. But backbone, this is the area that is directly kind of, you think about launch and hardware and service providers, rockets, satellites, ground stations, launch services, satellite communications, those kinds of things. Those are backbone, okay? That's in the backbone department. The reach department are all the services that benefit from having satellites in space. And the reach revenue is really generated in industries that are associated. And, there are things that you might not think about. Ride hailing, Uber, they benefit from satellites, right? Last mile food delivery, precision agriculture, precision weapons, fleet management, smartwatches, those all benefit. So remember, whenever you're thinking about space, making an investment in the space area, I want you to break it down to one or two areas, the backbone or the reach. And, really, you got to really distinguish the two. In the backbone side, almost none of them make money. I mean, really, SpaceX lost $8.89 billion on $23 billion in revenue. ASTS, which is something I'm hearing everybody talking about these days. They're promoting the heck out of that these days. That lost $500 million on $85 million in revenue. Redwire, Planet, Black Sky, Rocket Lab, all those companies that we've profited from, but they're all losing money, really. So when you look at the space economy, the profitable ones are kind of the old defense prime. You think of Lockheed Martin, Northrop Grumman, et cetera, et cetera. So, valuation is really, especially when you look at the backbone companies that aren't profitable, it's being set by narrative, not earnings. And that's one of the reasons we wanted to launch kind of this service. We wanted to do it smartly because we think there's a competitive opening for a really shrewd service, research service that looks at some of these frontier technologies really to help you navigate your way through that. Another interesting fact, and speaking of AST Space Mobile, I am not trying to pick on them at all, but I'll tell you something. Here's a fact that most people don't know. I see a lot of promotions going out there, really kind of teasing this direct to device satellite. And they're saying it's a $200 billion market. Okay. And I see a lot of this stuff out there, a lot of marketing promotions from some of my competitors and a lot of research reports. And I think to myself, these people aren't thinking clearly about this because, DTC satellites connecting directly to you and me, ordinary smartphones, okay? It is literally the most heavily promoted story in space investing right now. And AST Space Mobile has a $23 billion market cap because of it. Everybody's saying there's going to be a $200 billion market. Totally, okay? But, I'll tell you something. The technology isn't even there yet. The chips, the SATCOM chips going into our phones, they're not good enough to carry enough high-speed data. So basically, they're really just good for kind of text messages and simple uses. The technology is kind of reminiscent of AOL back in the 90s. It's like dial-up technology. And look, McKinsey estimates that that's a $2 billion market, not a $200 billion market, which is what all the hype on some of these stocks is, on all these promotions I'm seeing going out there. Now, I'm not saying the bull case on AST is dead. What I'm saying is they could exceed the forecast. What I'm saying is the technology, the SATCOM technology, has to get better before $200 billion is anywhere near in the picture. So, when I see all these people, customers of ours, writing in, what do I think about AST? When I hear friends of mine will ask me, what do I think about AST? I think it's great, but it reminds me of dial-up internet in the 90s. The technology is just not there. And that's one of the many reasons that we really thought that there was a really strong opportunity for us to serve you by having a service that actually, with a real critical eye, looks at some of these technologies and really breaks down for you where the actual value is going to go, where the profits are going to go, not the hype. So we're going to really, really look at where profits are accruing in all these exciting frontier technologies, where profits are more likely to go, which companies have real competitive advantages, like real competitive and cost and execution advantages over the next 5 years and are very likely to maintain that lead over the next 5 years. We're going to be bringing you those types of companies no matter what is going on, because we all know that we are undergoing this kind of major technological revolution, despite what happens in the market in the short term. And there will be bumps along the way, of course. But, we are at the forefront of kind of the second space age. It's a very, very big deal, but you don't want to play it stupid. You want to play it smart. And hopefully Frontier Investor, when we put it out there, we're working on it, but that'll help you play it a lot smarter. Anyway, that's all I have for you today. Have a good day. I'll see you tomorrow.